Welcome to You and Your Money, empowering you to reach your goals with tips to help you plan well, invest well, and live well. Today's episode features Michael Baum, Vice President and Associate Financial Advisor at Weiss Hale & Zahansky Strategic Wealth Advisors.
So if a company offers you phantom stock, what they're offering you is a form of compensation that will mirror or track the financial returns of the company's actual stock. So think of it as like a deferred cash bonus program. So you're given essentially a bookkeeping entry that says, all right, here's a unit of our company stock, and we're going to pay you a cash payment at some point in the future, dependent on how much the value of that stock has risen since it was initially granted to you. And there's two main types of phantom stock. So you can get appreciation only or full value. And the appreciation only type doesn't include the value of the underlying shares at the time it's granted. It just gives you the increase over the amount of time that the shares are held. And the full value model, you get the actual full value of that stock. So you get the value it's worth when it's granted to you, plus any appreciation that happens between when it's granted and when it's actually paid to you. The nice thing about this for an employee who's receiving a phantom stock grant is that you really don't have risk in the same way that you normally would owning a stock, because if it suffers a loss, you don't have any of your own money or own skin in the game. You're just hoping for that appreciation. There's also going to be a vesting period. So, if you leave the company before the vesting period is over, you would lose out on that future payout. But mostly the risk is in banking on a large, bonus at some point in the future that never materializes because the performance of the stock doesn't justify it or doesn't rise to a level where you actually receive anything of value. If that appreciation never comes, essentially you don't get the cash payment or the bonus of the appreciation that would have occurred. And with the executives or employees who may be offered this, that's something that we always want to understand is, what does your full compensation package look like? Some people may have these and not realize they have them. They may not understand how they work. They may not be incorporating them at all into their long-term thinking or planning. So that's something that I really enjoy doing and have done a lot of in my career so far. And with equity compensation, just like any investment, it's important to understand the money's not real until you receive the payout. So that ongoing strategy and management along the way is really critical to both maximize the payout and maximize the planning and strategy around how you're going to use that. I think it's an increasingly popular tool for business owners. They're looking to retain and motivate their top talent. We hear from a lot of business owners who, one of their main concerns is, how do I retain my key employees? How do I incentivize them to stay with the company and, stay motivated and keep pushing for, growth and appreciation of the company value? And that would be a good incentive tool that we would recommend that they look into, because it incentivizes, good performance for the individual and the company as a whole. So the better the company performs, the higher its actual stock will tend to be valued. And therefore, these shadow stock payouts that are tied to the performance of the stock will be paid to the employees who hold phantom stock and then benefit them. Before you either offer phantom stock to your team as a business owner or before you accept it as an employee as part of your compensation package, it's a good idea to talk with a financial advisor so that you understand, all of the terms and conditions, I guess, of the program. And, you can do modeling and look ahead and try to say, okay, if the stock hits this price, this would be what your payout is. And you can model various scenarios. The danger and the risk there is of banking on, profits or income to you that may never materialize. So you've got to kind of hedge that a little bit. You've got to be a little conservative, but that's kind of what we do. So we look at that and we model it out and we try to plan for, what will those cash windfalls, what will those cash payouts be used for in your strategic financial plan to make sure that your income and your assets are to work for you in the market in a diversified approach with a long-term strategy.
And that does it for today's episode. As always, thanks for listening to You and Your Money. If you enjoy our show, please rate and review us on Apple Podcasts, Spotify, or your other favorite podcast platform. And find even more episodes, videos, and other resources at our website, whzwealth.com. Be sure to come back next week for more tips to help you live fearlessly and pursue your financial and life goals. Until then, live well. Weiss Hale & Zahansky Strategic Wealth Advisors offers securities and advisory services through Commonwealth Financial Network, member FINRA, SIPC, a registered investment advisor. Fixed insurance products and services offered through CES Insurance Agency. They practice at 697 Pomfret Street, Pomfret Center, Connecticut, 06259, and can be reached at 860-928-2341. Weiss Hale & Zahansky Strategic Wealth Advisors do not provide legal or tax advice. The tenured financial services team strives to support clients in achieving their financial life goals. For more information regarding wealth management and customized financial planning with Weiss Hale & Zahansky Strategic Wealth Advisors, please visit www.whzwealth.com.